Ladies and gentlemen, welcome back to another video from the High Performance Trader. I'm your host, Joshua Salvetti, and today we're going to be breaking down market context. Market context is your key to consistent profitability, and I'm going to break down why. See, so many traders are out there trying to predict the market. They're trying to figure out what's going to happen before it happens, and they need to stop, okay? You are not Houdini. You cannot predict the future. You just need to learn how to read the story. The market is a story. It literally paints a beautiful picture. Some days it's choppy, other days it's extremely fruitful. And today in this video, I'm going to show you how to spot fruitful, beneficial, highly probable price action so that you too can capitalize on the market and clear over 100% returns. This is the trade that we took May 13th, 2025. Look at this beautiful price action. Okay, we literally got a clean bounce off end of day. We got a beautiful red bar that's ignored, initiating our entry criteria. We got an extremely healthy trend to the upside. How were we able to diligently capitalize on this price action so that we can clear over 100%, just executing absolutely flawlessly? And that is two words: market context. Okay, so Josh, what's market context and why are we talking about it? Well, market context is the space in between the lines that not many traders can see. Okay, it's the overall sentiment of the market. It's the mood, it's the environment. And the context lately has been extremely volatile. Okay, we got trade wars, we got all this crazy information, we got a president that tweets and then the market literally rallies or goes down. See, we need to be able to spot good conditions. We need to be able to understand, hey, should I be putting money on the line right now? And if so, how confident am I? And how do I know price is going to go where I think it's going to go? Okay, so that's what we're going to be talking about today in this lesson. Look at this beautiful trade. I was so happy, me and the team, we were able to capitalize on this. It was absolutely flawless. So guys, before we go any further, you already know, click that first link in my bio if you're trying to learn a strategy that's going to give you an 82% win rate. Okay, the HPT crossover is a beginner-friendly, extremely fruitful, extremely beneficial 3-step approach that gets you in and out of the market in a consistently profitable fashion. It gives you that confidence to really be able to know what to look for. It's a very clear strategy. It's very beneficial. Now, one of the cool things that I do is I send out weekly data reports on this strategy so that you can learn to spot what to look for, so that you actually know, hey, how well is this strategy working, right? The main reason why most traders aren't making money is because they cannot stick to a approach consistently. Okay, one day they trade supply and demand, the other day they trade breakouts, the next day they're trading trend lines. Okay, they're all over the place, therefore the results are all over the place. See, over here at High Performance Trader, our core fundamentals is figure out a clean and clear strategy and execute it each and every single day. This is how I was able to obtain consistency, and this is how I teach my clients so that they too can become confident traders, right? So come check that out, punch your email in. I will send those to you weekly, completely for free, along with a mini course on the strategy. And if you guys want more information on the Discord to potentially join our team and really level up, click that link below. Got more information, etc. Okay, so the day we're talking about is May 13th, 2025. We're going to make this a very quick lesson because that's all it needs to be. Now, the topic of discussion is market context. Okay, so before we go any further, we got to really break down why it's important. Okay, so the number one rule in trading is to figure out if it's going up or down. Now, let me ask you something. Can you move the market? No. Okay? You don't have the capital. You don't have the influence. Can you predict the market? No. We already said it. You are not Houdini. Therefore, you must learn to read the market. Okay? The market's a book. The market actually communicates to us. We just need to learn to understand her language. Her language is market structure. Her language is moving average. Her language is RBI, GBI. These are the tools that we use to understand who's in control of the price and then effectively get in and out of the market. So every single day when I'm going into the day, I ask myself, where's the market structure? Who's in control of it? So price is rallying above 580.93. Okay, this is a very important level from the daily time frame. See, it's all about market structure. As a matter of fact, every level on my chart is based off structure. So I'm going, hey, whoever controls 580.83, this is very important. Okay, what other levels can we watch every single day that are very important? Previous day high and end of day. Okay, these are two of the 4 pit numbers that I map out every single day on my chart. Previous day high, end of day, previous day low, previous day open print. Okay, because once again, we can't move price, the banks do. So we need to spot what they're doing at the levels that have the volume so that we can understand their footprint. Okay, so I got PDH, I have end of day mapped out perfectly. Now I need to figure out who is in control of price. So let's do a quick pre-market plan so that you can understand the process, okay? Every single day, I approach the market with the same process. I have a bullish scenario, I have a bearish scenario, okay? If market context is either bullish or bearish, I got to be able to understand which one it is. Therefore, I cannot neglect to only think calls. I can't neglect to only think puts, right? I have to have an understanding of what happens at these levels. I'm either going up or I'm going down, okay? This clarifies the whole situation for me, right? Because now I'm not worrying, I'm not married to one side, right? I'm not neglecting any information, okay? My brain is completely objective and I'm going, okay, whoever controls these critical levels, I'm going to trade with, right? And that's basically, if we read this, that's what the pre-market plan says. Whoever controls the open, I'm looking to trade with. Whoever controls end of day or previous day high, I'm looking to trade with. And if buyers hold it, I'm looking to target 58534 and then 58958. Okay, so once again, extremely simple. So, all right, Josh. Basically, we need to watch the pit numbers in the open. But you said this video was about market context. You're right. Let me explain. So market context, in my opinion, is best done on the 1 hour time frame. Okay? We're day traders. We're trying to capitalize in between the hours of 9 and 4 o'clock Eastern. Okay? So what I've found is using the 5-minute time frame serves me extremely well. Now, which larger time frame makes the most sense? Are we going to use the 4-hour chart? It might be a little too big. Are we going to use the 8-hour? Not really. Okay? I'm going to use the 1 hour time frame because the 1 hour time frame gives me a clear understanding of a healthy or unhealthy trend. So if you're part of my group and you've taken Trader Bootcamp, you know I explain this very thoroughly in my online course. But a healthy trend is a trend that has a very high probability of continuing. Okay? So for us to understand who's in control of the market, we have to watch to see who's in control of the levels of interest. How do we understand who's in control? By reading the trend. Okay? If we have a healthy 1 hour trend, I am looking to trade the market in whatever dominant direction the market's currently in. So what's a healthy trend? A healthy trend is a trend where the moving average is not extended. Okay? You guys see right here on the day before, we have price action moving to the downside. Let me get rid of the EMA cloud here real quick, just so you can see this a little better. We got price rejecting 580.57, okay? Now, as we're making our way down, you'll notice we have what we call a pocket in between the moving average and in between the candlestick. Is this healthy? Absolutely not. Pockets mean pullback. Anytime we are getting extended from the moving average, we tend to get a pullback. There's millions of examples. Look right here. Another pocket, another pullback, okay? Now, how about price action like this? Is this healthy or is this unhealthy, right? This is pretty healthy price action. Candles are closing on the moving average, okay? This means no extensions. Yes, this works on the 1 hour, but where it really does its magic is on the 5-minute time frame. So once again, we're watching price. We're trying to figure out the context. So what do we use? We use the 1 hour 9 DEMA. That's the double exponential moving average. So when I'm looking at this, I'm going, okay, this is a very healthy trend to the upside. How do I get into the market? Okay, so now let's go over to the Discord. And I'll show you right here at 9:50 a.m. I'm calling out to the team. I'm getting in longs, okay? Now, what am I looking at here? Well, number one, is this trend healthy? Is there any extensions? No. This is extremely healthy, okay? Price is literally hugging the 9. We're bouncing off end of day. We're bouncing off previous day high. And the EMA cloud is green, okay? We get a beautiful red bar that gets ignored, and at that point we are in the market, stop below the previous candle, okay? So once again, this is what the market looked like when I was confidently entering into price, okay? Meaning I had an understanding of the market context, and I was willing to put money on the line here to target 58534. Guys, it literally comes down to your ability to spot a healthy trend. Healthy trends continue. We're looking for continuations. Therefore, trade the healthy trend. If you're not trying to trade continuations, don't trade healthy trends, okay? Healthy trends are going to continue. What I really liked about this trade here was the bounce off end of day, the bounce off the 20 EMA, buyers owning open print, but what really sealed the cake was the healthy trend, okay? This is what a healthy trend looks like. Use the 9 DEMA. It is extremely beneficial. And guys, just look. I mean, watch this unravel, because I like to update to the team, hey, this is what the market looks like, just in case people can't watch the charts. They literally could just watch my alerts, okay? Once again, just beautiful price action. Healthy trends continue, right? Here, I'm getting very excited. She's too healthy. I gotta hold, right? Guys, healthy trend, okay? No extensions, no gaps, right? We're not getting extremely far away. She's rallying, and at this point right here, I'm starting to look for exits because we are getting extended, okay? I booked it right there around 11, what time? At 10:10 a.m. So just so you guys get a better understanding of why I got out of the market, was right here at 10:10, and it's because we were starting to get extended from the 1 hour moving average, okay? So in the description, I'm going to add the indicator that shows the 1 hour moving average on the 5-minute time frame, or on lower time frames, okay? So it will be posted in the description. Anytime I'm getting extended from the 1 hour 9, I'm looking to make my way out of the trade. And also, look guys, we were literally bouncing off the 1 hour 9 here. We had a healthy 5-minute trend. We found an RBI. The rest was history. Okay? So guys, I hope you like this video. Market context is key. Okay? Learn to spot it. Learn to execute. And you will have way more confidence as a day trader. So click the links below. Join the team. Like, subscribe. And I'll see you in the next lesson.